Now, when it comes to finances, I know most of us are quite a bit not enlightened about this. So, it is something that is so common around that people get to be more into saving and saving in banks. And today, I am here to tell you why you should reconsider your opinion, or you should reconsider your decision on saving through the bank, or taking your money in a bank and allowing it to stay there. Yeah, this is Insightful Endeavors. I am Ian David, and even before we continue, remember to subscribe, like this video, share it with your friends and loved ones, and also leave a comment there down below so that we can get to continue having this conversation even after this particular episode. Also, remember to turn on the notification bell so that you can be notified anytime we get to upload a new video, of which I know you don't want to miss. So let's get started. See, when you get to save your money in a bank, there is something that the bank will never let you know. This information that is completely hidden from us who always save our money in the bank. But you know what? That's why this is Insightful Endeavors, and we share matters, wealth, health, and personal growth. And so today I am here to enlighten us and to share insights on why we should reconsider that decision, or that option of taking our money to the bank. The first thing that you need to know with the bank is that anytime you take your money to the bank, whatever remains to the bank, assuming you get to save a million, 1 million Kenyan shilling in a bank, 90% of the money does not stay in the bank. The bank uses it to generate more money with your money. So what remains in the bank is only 10%. Assuming you have deposited 1 million in a saving account, and then you go to your back to your very same bank to request for a withdrawal of your money, or to cash out all your money, then you cannot get your money at an instant state. You are always told to wait maybe for 3 days, for a week, or 10 days, so that you can get your money back. Why do they tell you this one? Because anytime you get to deposit your money there, 90% of the money is used to lend and to other people, and again it is also used by the bank to invest in treasury bonds, and also even to trade in forex and other things that the bank gets to do around with your money. So the bank gets to benefit with your money. But now the issue is here. To you who have deposited your money, fine, you have deposited your money there, and they have assured you maybe of an interest rate of, let's say, maybe 5% or maybe 6%, of which that's the normal rate that we get with our banks here in Kenya. They are not so high. Those are the normal rates that we get. So the bank has assured you of, let's say, of an interest rate of about maybe 7%. But again, now here comes the issue. If the inflation gets to increase, what is inflation? Inflation is how the price of goods and the price of goods and services gets to rise in every particular year. So assuming that you have been promised an interest rate of maybe 6%, then there is a deduction of a tax of maybe 3%. You find that you are remaining with a 4%, and then from the 4%, you find that the inflation rate is above the interest rate that you are being promised by the bank. So what happens is that if you saved your money in a bank, then you will not receive any interest at the end of the year if they promised you an interest rate after the year. Because why? Your money has already been subjected, or has been already exposed to inflation rate, which is a danger to your money. You should never allow your money to sit in a bank, because when your money stays in a bank, it is subjected, or it is exposed to inflation rate, and when it is exposed to inflation rate, then you don't get any profit from it. You don't get any interest from it. You find that most of the people that we have saved with the banks before, there is nothing that you get from the bank. The bank only uses your money to generate more interest for its own good. Because look, you deposit 1 million Kenyan shilling, they take 900 or 90% of that money, then they lend to another to another person, to another, let's give him the name John. They lend your money to John. Then John takes the money and he's lent the money, or he is given the money and he is supposed to repay at an interest rate now higher than the one that you personally have been promised. So the bank only gets to benefit from you and also benefit from John, who is a borrower of your money. So you need to be wise on these things. You don't need to be saving your money in a bank. Yeah, you need to get another option. Another option is always investing your money. Invest your money. Where do banks invest? Banks invest with the treasury bonds. If you can be able to save up to $1 million Kenyan shilling, and we get bonds that are treasury bonds and treasury bills here in Kenya, you find that you can be able to beat them from 50,000 Kenyan shilling all the way to any amount that you want to bid. So that is something that you could consider instead of taking your money in a bank and allowing it to lie there. And even to you that who is not able to maybe accumulate or save this money to maybe 50,000, you can always consider other ways like the money market fund, because we find that here in Kenya we have some money market funds that allow you even a minimum deposit of as low as 100 Kenyan shilling. So you can always take advantage of this option instead of depositing your money in a bank and allowing it to sit there, and then you subject your money to inflation unknowingly. Yeah, that's one secret that the bank will never let you know. The second thing that the bank will never let you know is that the banks get to judge you by your looks. If you go to the bank and you don't have any saving record with them, then they will judge you by the way you appear. If you appear like a broke person, then you can be sure they won't lend you any money. Yeah? If you appear there like a needy person, like a desperate person, they judge you immediately from how you have come looking, and they don't get to lend you any money. And even if they lend you money, they only lend you money that definitely that money that won't get to help you in any way. So you find that banks are always there to make money. They are not there to make you rich in any way. Banks are there to make their own money, or to get to benefit from your own money. Yeah, you got to know that. Another thing that you need to know about saving and saving money in banks is that no one has ever saved their way towards financial freedom. No one has ever saved money towards their financial freedom. Let's do a simple calculation. Assuming you are earning a salary of maybe 30,000 Kenyan shilling in a month, and you need to save, let's say, like 1 million Kenyan shilling. How long would it take you to save that particular amount of money? It will take you quite a while to save that particular amount of money. And again, assuming that you want to save, let's take a simple calculation. You want to save 90,000. That would mean it is 3 months. But again, with these 3 months, how do you be able to save that 90,000 within 3 months? And again, you have to remember that you have expenses that you are taking from this. You are 30,000. You have bills, you have needs, you have all the things. Maybe you have a loan that you are servicing. So it becomes very impossible for you to save your way towards financial freedom. You can never save your way towards financial freedom. The way you can get to attain financial freedom is by you investing your money and not allowing your money to sit in a bank, because when your money sits in a bank, it is only going to work for the bank and help the bank generate more money with your money, but you as a person, you don't get to benefit. And so with this kind of information, I expect us to be more people to be more seeking knowledge or seeking ways on how we can get to invest our money instead of just storing our money or saving our monies in the bank. Yeah, banks will never make you rich. Banks are there to make business and get to benefit. So banks, they are not the best option for anyone who is willing to get or looking forward to becoming wealthy. Bank, okay, you can save maybe, but save only for the short term, not for a long term. You can save maybe, let's say if you are saving some funds, but this is the best way to use the bank. And this is the best way that I recommend for us to be using the bank. How you use the bank is you can only use the bank as a way of transaction, where you receive your money After that, you transact your money, because the bank can help you in these transactions where you get to transact your money, to automate your money and channel it towards the specific areas that you want your money to go. So with banks, this should not be a saving platform. It should be an investment platform. With a bank, you suffer so many risks. The first risk we have said, it is the risk of subjecting your money to inflation. The other risk you suffer is that you find that this bank, at some point, they can even get to give out your details to money lenders who keep on now persuading you so that you can take more loans, because again, another way that the banks get to benefit is the more they lend loans, the more they get more money, or the more they get more profits, because with the loans they have a higher interest rate than the one that they promise you who have deposited. So you also suffer the risk of having your details exposed to so many people that you find every now and then a certain mobile app that lends loan is calling you, is sending you a text message on how they can lend you money. And this can happen through the information that you have already given the bank. Another way that the bank gets to exploit you and with your money is by you using the credit card or the ATM or any other card that the bank gives you. They keep on charging you over your money. When you use the card, they charge you to spend your money. When you are checking your balance, they charge you on checking or on requesting to find out how much money that you have in your account. Yeah, they get to exploit you in so many ways. And so I'm not saying that saving in banks it's bad, but again, it's something that we can have to reconsider before making any move with our money. Remember, wealth, health, and personal growth, there are three key areas that you need to be very careful of and about, so that you can make sure that you make your life better every now and then, or every day in and out. Yeah, so that's it from us. I hope that this information is helpful, and you can also let us know maybe some of the ways that you think that the banks could not be the best option, and if not so, if so, then which other options we could consider apart from the options that we have shared here of investing. We have said that you could invest with the treasury bonds, you could save your money with a money market fund, because with a money market fund they use your money to trade, and they, again, when they trade with your money, or they invest whatever that they invest in, your money is not subjected to inflation. So with money market funds, your money is more safer, and it's at a more better place than saving your money with banks. So those are the kind of options that you could have, and any other option, let us know in the comment section. And again, we have said that remember to like this video, to leave a comment there down below, to share this video, and also subscribe, and most of all to turn on the notification bell so that you get notified anytime you get to upload a new video. This is Insightful Endeavors, and my name is Ian David. See you next time. Bye bye.